I'm a broker associate in Los Angeles, California. And this is my associate.
Yeah, Patricia Castillo here in Downey, California.
The Beverly Hills of the 562.
That's
and
right.
Our good friend.
Gustavo here in Orange County.
Behind the orange curtain, Gustavo Segura. Very nice. Welcome. And we're here to talk about all things home buying. So let's see. Let's start with what might be interesting to talk about. How about those interest rates, Gustavo?
Yeah, they didn't come down as much as we wanted them. They went the other direction a little bit. The Fed backed off as far as raising the Fed fund rate about 25 basis points. Everybody was very happy about that. But then the job market report came out. That was very strong. Added, I think it was over 500,000 jobs. And then now we've got the inflation report for January, and that came out a little bit higher than expected. So that market did not react very positive.
Well, what's it mean for home buyers? I can tell you, I was at a court auction last week, and we had an escrow at 720 and got overbid up to 925. I was on one this morning, came in at 517 and ended up bidding at 617, 750. So there's buyers looking for deals still. There's, it's not that nobody's buying. There might be less people bidding per house, but it seems there's still demand. I closed an escrow. It was tough. The sellers had to give a little bit to get it closed. But then we turned around, the same buyer got on another property on a full price offer. So there's a lot of activity, even given these rates. I think the problem that's causing the rates to go up is the stronger than expected economy.
Right. Yeah. I think when we look at that job market report, that was a big key results that came out that just did not go well with rates. So we expected inflation to be coming down, which it is, but this inflation report was supposed to be a little bit better than what it did come out at. You're right that we still have borrowers taking advantage of some good rates. As the rate comes down slowly, more buyers are going to come into the market, and they know that it's a good deal. They were just waiting for the rate to come into their wheelhouse a little bit more. 7% wasn't good. They got to 6.5%, and now we're getting a lot closer now to 6%, and a lot more people are out there shopping.
And when prices got down to 6 or 6.25, you had buyers that I'm going to wait for them to go down more.
That's what the sentiment always is. Let's see if the rates drop even more. But, in reality, like you said, Bill, there's a lot of buyers that are coming back into the market right now that might have taken a seat back, last year. And I'm seeing that as well. What is not well publicized with buyers and even first-time home buyers is all the opportunities that they have right now. And so as real estate agents, that's what our job is to negotiate on their behalf. As you mentioned, on one of your deals, you had the seller contributing some closing cost credit to the buyers. And that's what it's really taking in today's market. It's a team effort to get the deal closed. So if you're looking to purchase a home, there are opportunities as far as having your closing costs paid for, or possibly having your interest rate brought down for maybe the first year or even the first 2 years. And that's something that would come out of the seller's proceeds. So they contribute that to the buyers in order to help them get into the property. And obviously they want their property sold. So when you're looking at, what the rates are, I would say don't even let that scare you, because there's definitely a workaround, and that's how properties are getting sold right now. So it's a good time, if you've got a down payment saved. And also we're in the middle of tax time now. So if you're getting a refund, it's a great opportunity to allocate your refund towards your down payment and just make that a stronger down payment for you.
There's people buying properties. So it's one of those things where you can, and I have buyers who'll be in chat, I on my social media, they'll put, I'm going to wait for rates to come down 20, 30%. And it's like, okay, but that was 6 months ago. And here in LA, they've only gone up a little bit or stayed the same. They're really not coming down. Certainly in some markets, Phoenix, Austin, it's a different business than here. Their finances are different. We don't have any place to build in Los Angeles. Even if we did, they don't want to build. If they had when there was empty land, I had a listing with a couple acres here in LA that you think the politicians want to build housing. They don't really want to build. Or they do, it's so expensive that it doesn't make sense. So until we have alternatives, there's only one, we have more people, the same number of houses, the prices for those are just going to go up over time.
Yeah, absolutely. So,
So we're looking.
I see Prit Lavani and Jackie Falcon are on the call today. So welcome to our call today, Prit and Jackie. How are you guys doing?
Good, thank you.
Great. If you have any questions, you can go ahead and just jump in. We do, encourage participation. Or if you'd like to just enter your question or comments into the chat box, we'll be checking that throughout the Zoom call as well.
Okay. Yeah, I'm just kind of listening. I wasn't sure what to expect, so.
Yeah, this is a very collaborative call.
Okay.
So as I mentioned, if you have any questions or you've heard something recently and you just kind of want to throw it at us and verify it, we're here to help you with anything we can, offer any type of guidance in the home buying or selling process. So I myself, I'm a real estate agent, just like Bill, and Gustavo's a lender. So if you have any questions about financing or different types of loan options, we could go over that as well too.
Yeah, I mean, I guess I do. I have never purchased a home, but am thinking about that for myself, and I don't, it's just so expensive. So I'm like, I don't even know if that's in the cards for me, So,
What area are you in, Jackie?
I live in Sherman Oaks.
Oh, okay. I used to live in West Hills
Oh, cool.
many years ago.
Yeah, I'm in the valley. I like the area. I do. Pretty.
Sherman Oaks is a nice place to live.
Yeah. So, yeah.
And what I would say to that, Jackie, is, being able to talk to someone like myself and being able to have a little bit of an analysis done will help you get a better idea of where you're at exactly. Like you said, you maybe not, maybe yes, if you are a little bit away from it or a lot away from it, at least being able to talk to someone and have an assessment done will help you see where you're at and what steps you may need to take in order to get there. Maybe it's in a year, or maybe it's a little bit longer, or maybe it's now. But at least having that conversation will definitely help you out.
Right.
Yeah. So I'm more than happy to take a look at and just talk a little bit more about your specific situation. And then that way you know exactly where you fall under.
Right. Yeah. And, I should, about a year ago, I did have I think I did have that looked at, where I looked at what it would look like for me to get a loan. And so, here I am a year later, and, I'm still not quite there, I think is what it is. So I don't know that I'm even viable at this point to be able to get a house, but it is interesting listening to you guys talk about what the interest rates look like now, and are people buying right now, and it's interesting for me to hear, because my goal is ultimately to buy a house.
Sure. So we did cover something last week that I think was really interesting, for a lot of buyers that are in your situation.
Yeah.
Where they're interested and maybe, looking to see what they could qualify for in today's market.
Right.
Because as the months and years go by, you're working on, paying down your debts, and you might have an increase to your income here and there. So those are things that, Gustavo's able to look at without pulling your credit. And that's something that we covered last week over this home buyer seminar, was basically doing what's called a soft pull. And so he'll look at your scenario without pulling your credit and give you a pretty accurate, response on what your analysis looks like. So that's
okay. I'd be interested in that.
I think that's really, advantageous, is to look at your scenario without doing the full loan application, because sometimes that deters people just because they think it's very time consuming and a lot of documents are required. So it's already putting pressure on in the beginning. But I think this is a really smooth process, the way that Gustavo handles it. And so, like I said, it doesn't require a lot of documentation up front. And just having a quick phone call, he can give you a pretty good idea of where you're at.
Okay.
Yeah. So I'll give you a call after the Zoom today, and then we can just talk a little bit more about that.
Cool. Okay.
Yeah, thank you. So we were, Gustavo and I were talking earlier before we got on the Zoom about income documentations to qualify. Also certain things that may seem like it's going to deter you from getting qualified for a loan. And one of the big things that usually comes up is a car payment, because the reality is most of us have car payments, unless you bought your car cash or you finished paying off the loan. Are you payment free, Bill?
My favorite car is a paid for blank.
Yes. And that's what you drive, a paid for blank.
Yeah.
So basically, if let's say you were looking for a better interest rate and maybe you were having some credit challenges and somebody else co-signed for you in order for you to get that better interest rate. We come across that a lot as well, where the home buyer may say, it's really not my car payment. I co-signed for somebody. I lent them my credit so that they can qualify, maybe their, son or daughter or sibling. And so there's a workaround for that so that it doesn't directly impact or take away from your purchasing power. So that's one of the things that I thought would be a good topic for today. And Gustavo, you can go into that a little bit deeper as far as how you can look at somebody's, like what we were talking about, doing a soft pull, and also looking at what they truly qualify for, taking into consideration that maybe that car payment doesn't belong to the applicant.
Exactly. And so we take a look and we see that somebody else is paying that car, then we ask for bank statements to show that 12-month history to show that somebody else is paying for it, that it's coming out of somebody else's bank account, that you are not on that bank account. So if that's the case, then the lender will go ahead and take that liability off. Because you were able to document that somebody else is being able to take care of that. And it has to be in good standing, no late payments, nothing like that. And then that can definitely help someone out. And we see this a lot because of family members, you're helping out, like Patricia said, a cousin, a daughter, and all of a sudden you have an extra $500 added to your debt to income ratio. So definitely something that we can work with. And we can help exclude that liability. It still stays on your credit. We just exclude it from the calculations.
Just like we exclude Gustavo's video from this call.
Yeah.
It's the same exact technology.
Yeah, it's getting excluded from this call. Yeah.
Poor Gustavo.
I know. I have no idea what's happening.
It literally looks like you are flipping out.
I know. It looks like it crosses over the wires, and then all of a sudden I see Bill on my screen, and then it's like it just keeps rotating. So
yeah.
Oh gosh.
Okay. So the answer is, it's kind of like, if you feel like you're making your pain, part of that's getting old. But if it's more than that, go see a doctor. Same with your finances. You'll qualify for more than you think you will if you have a professional agent, or at a minimum, you'll get a game plan that you can work on to qualify within a reasonable time period. And so that's why we work with professional agents such as Gustavo, so that they will help our people achieve their dreams. That's his job, is to get them into the deal somehow.
Yeah. And right now we talk about taxes too. Right now I'm talking to people that are self-employed. They're like, how much do I need to report on my 22s, right? In order to buy a house that's 500,000 or 600,000 based on their self-employed income. Take less deductions to show more income on paper. Yes, you may pay Uncle Sam a little bit more, but it's going to help you qualify for a conventional FHA loan, something that's going to be a traditional mortgage, instead of going bank stated, or instead of going non-QM, which is going to be much higher interest rates.
Mm-hmm.
Yeah.
Yeah. So Jackie, do you have any questions right now on anything that we've covered so far?
Nope.
Okay, good. Great. So one of the other things that we were thinking, you know, was a good topic to cover was basically when you're earning salary versus an hourly rate at work. So if you have a salary type of employment, that is a different type of, you know, analysis as far as your qualification goes in terms of your purchase price and what it looks like if you're getting an hourly rate, paid an hourly rate. So Gustavo, what does that look like for, or how does as a lender,
Yeah.
how does that affect, you know, the qualification, whether you're getting an hourly rate or a paid salary?
Yeah, so we basically need 2-year work history. So we always start there. And then from there is if you're an hourly employee and you're moving on to another hourly employee, but you're getting like a $3 raise, I can't automatically just include that and say, well, this year you're going to make this much. So we're going to use that income. But if you're salary, then we can go ahead and you're an accountant and you're getting another accounting job and you're going to get a $15,000 increase in its salary. I can account for that right away. And that is going to be able to get you in there right away and be able to have a much higher income. It's going to lower your debt to income ratios and it's going to get you to a higher loan amount. So definitely if you're changing, it's always good to go into a salary type of position, just like it is going from self-employed into a W-2. It's always much better to go that way than the other way around, which is W-2 to self-employed. That's no good. We're going to have to wait 2 years or do bank statement loans. And if you're going from salary and then all of a sudden you're going to go hourly, that changes and it makes it a lot harder. So salary is always something that we can count right away.
So salary is immediate and you're getting paid hourly and possibly getting a raise in the near future that can't be applied towards your qualification immediately.
Right. I cannot account that for that. So that's the downfall of the hourly employee.
Mm-hmm.
Yeah.
And so you just mentioned a bank statement loan. Can you just give a brief description on what a bank statement loan is?
Yep. So someone that is self-employed and they can't fit the traditional, because they have too many deductions. So then they look at alternative financing solutions. And those alternative financing solutions could be a bank statement loan. That's where we take a look at their business account. And we see that they're actually making money. They're actually depositing $20,000, $30,000 a month. They just have a lot of write-offs on their taxes. So we take a look at that income, and then we come up with a calculation in order to qualify them based on that income. So let's just say it's $20,000. We may be able to say we can qualify you on $9,000 income on that, as opposed to the regular taxes where maybe they were claiming they make a lot less. So the bank statement loan is going to look at the last 12 months. We're going to be able to see all the deposits and be able to then calculate what is a good qualifying income based on the $20,000 that they're always deposited into that account. That has a little bit more risk for a lender. A lender will give them a higher rate for that. But it's something that is very common with self-employed business owners. They're called bank statement loans. They're called P&L, for profit and loss statement loans. And they all fit into the umbrella of non-qualified mortgages because they don't follow the traditional Fannie and Fannie Mae guidelines from Freddie Mac. So that's why it's a little bit of a higher risk for the lenders. They can still do something with that loan as far as secondary market, but it's not going to go to Fannie Mae and Freddie Mac, which they're the ones that are buying, 70% of the loans out there.
Right. And at some point, they can refinance and get out of that.
Yeah, so at some point they can. We just have to take a look at what are they doing after with their taxes. So it's all going to come back to that tax situation. If they continue to stay as is, meaning they always have to stay non-conforming, eventually as the rate comes down on the non-conforming side, the rate's going to come down as well. So if right now they're at 8.5%, when all the rates do come down, the non-qualifying mortgage rates will also come down and they'll be at 7, 6.5. And that's how it was before when during COVID. As everything comes down, those rates also come down. So if they refinance into a lower rate, then they can just stay there a little bit longer.
Yeah, so even if it was a non-QM loan, and let's say in this case it was a bank statement loan, and as you mentioned, the rate may be at 8 or 8.5.
Mm-hmm.
It's still something that shouldn't sound too scary because they could still take the benefit of let's say a seller that's willing to buy down that rate for them, which would bring them back down to where the rates are actually at today, which is,
And
I think
so,
we're at 6.75.
And I always tell the self-employed business owner, keep in mind, you're already saving a lot on the taxes side because you're not getting hit on the income, So
Right.
yes, you're going to be paying more on this side of the business, but it's one side or the other. If you're really going to put on there, less deductions and all those itemizations, then you're going to be paying more on your taxes, but your income on paper is going to be higher, which allows you to qualify for a traditional mortgage. But if you don't want to do that, then that means that you're going to have to pay a little bit higher more on the interest rate when it is a non-qualified mortgage.
Right.
Yeah.
That makes sense.
Yeah.
Obviously, the lender has to cover themselves somehow.
Correct. Yeah.
Mhm.
And they have different guidelines too. A lot of times they want a little bit more down payment as well. So, again, these loans are a little bit outside the traditional guidelines. So the lender, like you said, they're covering themselves and they are asking for a little bit more information.
Right. And maybe somewhere more like a 25 to 30% down payment.
Yeah, sometimes it's very common to see at least a minimum of 10%, and then they go into 15, 20, and then depending if it's an investment property, the property type, a second home, all those things, they want a little bit more down payment. They want to make sure that this is not going to go into it. This is not going to be a 3% down loan program, right? So,
Right.
yeah.
Yeah, you gotta have some skin in the game for these types of deals.
Exactly. So, but there's a lot of options. I think the main thing is, even if you think you may not be there, let's talk about your situation. That way, specifically what we can help out, like we talked before, there's down payment assistance programs. Is that a good choice for them or not? So at least let's have that conversation so that we know what's available for them.
Yeah, because there's still money in those programs. So that might be something that could still work for some people that are, looking at purchasing a home.
Yeah.
So that's something that, we'll always look into for you is a down payment assistance program. And is that going to be something that, you fit into that criteria that you can take advantage of that program?
Right. Correct.
So we are at about 5:25 p.m. Pacific time. Do you have anything to add, Bill, at this time?
No, I think you guys did a nice discussion on, again, we've said this every week. It's about preparation. Anything you want in life, anything of value, you got to do the work and you got to prepare. And whether it be getting your taxes done or getting, credit run or your income reviewed by a professional, that's the preparation. That's the hard work we've got to do.
Mm-hmm. Absolutely.
Yeah.
Well, we're here to help you guys and answer any questions. So, I always say it's always a good time to buy if you're ready and if you can afford the payment. So, that's what we help look at as far as what your situation is. And if it's not, maybe sometime in the near future, let's say between now and 3 months, maybe it is a year, but we help look at that roadmap for you and plan that out for you as well so that you can see what the realistic time frame is, and between now and then you're still preparing for that date where we get to go home shopping.
Mm-hmm.
I was a little late getting back to, we do have people on our Facebook line, the live stream.
Okay.
And people stopping in saying hi. Jill saying she's in Sherman Oaks. Of course, Jill, Spetty, everything over Sunset's really your territory. We try not to sell anything over there. We leave all that to you. And she says, if there's more housing, with the excess. Well, she makes a good point. You hear about people leaving California, there should be more housing, but we have more people leave California than come to California from other states. But we have more people coming into California from other countries. So our population is growing. It's the number of people moving to other states that's declining. But our overall population has continued to grow. So there's no empty houses. In Japan, 13% of all houses in Japan are vacant because their population has declined so much that they don't have enough people for the houses. And they project the next 10 years, 30% of all houses in Japan will be vacant. How's that for
Wow.
Wow. I don't know that we'll ever see that here in California. I have two clients that left California a few years ago, and now they're looking to come back. And they're trying to see what they qualify for and
Wow.
Make their way back to California.
Wow. Okay. Well, let's hope to come back. Love to have you guys back.
Mhm.
But that said, what else? We have that's our comment. So I think we've done it. I'd say we've done a good job today. And if you want to buy a house, contact Patricia, contact Gustavo, and let's get in process. And we're here to help you guys.
That's
Final,
right.
final words, Patricia.
Well, thank you everybody for watching today, and I'm always here. I'm always available. So give me a call. Happy to help you. I'm at 323-365-9909.
Gustavo.
Likewise. Yeah, likewise. Thank you. And 714-334-4563. And thank you again. And I'll figure out this camera, see what's going on with this issue.
Okay. Well, great. Well, thanks for having you. And again, we do this every single Wednesday, 5 p.m. Pacific time, 8 p.m. Eastern. We live stream it on Facebook and YouTube. I'd love to have comments on there. Thank you, Joe, for stopping in as always and saying hi. It's always great to see you. And for the rest of you guys, have a great week. If we can help you, please reach out. Thanks, everybody.
Thank you.
Guys.
Bye.
Bye-bye. Thank you.
Hi. Yeah, I'll be fine. No problem. Very good. Okay. Thanks, bye.